SoundCartel.
The US election is finally upon us, and the world is drawing in its collective breath. With coronavirus looming as a backdrop to the most consequential election in decades, how can shareholders prepare? And what could it mean for Australian business? From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. The race is nearly over, and as the world awaits the outcome of the extraordinary contest of the US 2020 election, it's an anxious time for many, including investors in the share market. How will the markets respond, depending on who gets over the line? For a balanced perspective, we turn to respected market commentator Elio D'Amato, Managing Director of spotty.com.au. Elio brings a 20-year career spanning equities, research and funds management to the table. So Heather Dawson asks, how does Elio read the share market right now, at the pointy end of the big vote?
Well, it's almost like it's holding its breath, to be honest with you, getting ready for a very big exhale. Now, the question will be whether that exhale is a very disruptive one or one of those nice calming ones we tend to do while we're practicing yoga. I think it's obviously an unknown, and as we've talked about over the many years, whenever the share market feels uncertainty, that's when it gets most nervous, and no better exhibited than by the last week leading up to the election in of itself. So, yes, everyone's just waiting for some clarity. Everyone's waiting to try to identify some certainty. And then I think you'll see some rapid moves either way, depending on what sort of outcome we receive.
Well, I think it would be fair to say that Donald Trump's done a fair amount of stirring up internationally during his past 4 years of presidency in the US. If the share market looks for stability, a change in presidency will be a good thing, wouldn't it?
Well, of course, then there's others that would suggest that a change of presidency would actually introduce stability, something that US politics hasn't had for some time. Obviously, the certainty element at this stage is that Biden tends to be in front in the polls, and a victory for him would probably deliver the biggest amount of certainty for most, as that tends to be priced in as the likely scenario at this stage for the market. However, you are right that should President Trump continue, then I think there will be also another sigh of relief in the sense that many people know he's a known quantity, unlikely that anything will change. And of course, he's very much pro-business and trying to get the economy going. So it's an interesting question in of itself, because normally, yes, a change of president during their 8-year period, let's just call it that, would introduce uncertainty into markets. But I dare suggest at this point that given the nature of the incumbent or the other candidate, that everyone's feeling quite comfortable that possibly this would be a known quantity and may be willing to make an exception this time.
Yes, because many probably have been surprised at how well the share market has actually sustained itself during the past 4 years. Should they have been surprised?
Well, of course, investing based on headlines is a very dangerous game, and over the decades it's proven to be a big capital killer for portfolios. Inevitably, whilst the actors may change, the plot will remain the same. There's always reasons to be afraid of the share market, and avoiding it inevitably costs you in the long run. So notwithstanding the fact that, yes, there's been some interesting tweets and the discussion across various different media channels has been very interesting, ultimately the market will look at the underlying performance of businesses to decide as to whether they should be going up or not. It is important to note, though, that we have had a split economy in many senses, particularly when it comes to the share market in the US. We know that tech giants have done incredibly well, whereas your more traditional industrials type businesses have pretty much lagged. So notwithstanding that the markets in the US over the last 4 years have had a solid run, COVID excluded, it has been only, really a few minor number of companies that have done the majority of that heavy lifting, who now, of course, are all amongst the largest businesses on the exchange, and hence why the returns that they've been able to experience.
So, Elio, at a time when the US is, we could say, at a critical point politically, are there better or worse sectors to be looking at, or stocks?
Well, look, that's a really interesting question because, of course, I don't think what I'm about to respond with is not actually incumbent on who actually wins the election. To be honest with you, I think the market's actually quite comfortable with either candidate coming in front come Wednesday or Thursday, whenever the counting is actually done. What I suspect will be the focus, though, of investors is, of course, that underlying company performance. So rather than focusing on the broader sectors as they were, if you look deep down, there'll always be companies within those sectors that will do well. I mean, look at energy, for example. We know most major OECD nations are moving to a net zero carbon emission culture come 2050. That's obviously bad for the energy sector as a whole. But then within the energy sector, you will find spots of good businesses who will do well and will evolve and will adapt and overcome. So I would encourage as much as I can people to look at the companies themselves. Of course, many of them tend to be focused on IT, for example. Many tend to be focused on healthcare. Industrials that have IT as a core base that support people working from home, working remotely, building on efficiencies. They're the types of companies that are most likely going to be the future leaders of tomorrow, as opposed to your traditional cold stocks or a very large, asset-heavy industrials-based businesses. From our perspective, yes, IT, you're looking at stocks like Appen, the language recognition systems company. There's a whole range of those wax stocks, even though WiseTech's probably our least preferred of those. Xero is a quality business. Afterpay, as much as it's binary and divides investors, no one's going to tell me that in 10 years' time, if they don't achieve what they say they're going to achieve, that we won't look back and think that it's cheap today. Yes, there's a bit of risk you're taking on, but if you believe in those future thematics, like investors did with Amazon, like they did, with all those big FANG stocks in the US, they eventually do repay you. Healthcare, obviously CSLs and ResMeds are great businesses to have, core elements of the portfolio. Even a little company called Exopharm, EX1, higher risk, of course, because it's not revenue generating yet, but it uses exosomes as a replacement for stem cells to build on regenerative medicines, which that is a huge field of study at the moment, and they're the only company in Australia that actually gets involved in that stuff. The only other sector I would definitely point to would be commodities at this stage, not just your gold stocks, I suppose, but also your base metals, because there is going to be a big economic global push coming over the next 5 to 10 years. That means an investment in that infrastructure that's desperately needed. Of course, we know China continues to consume a lot, but the rest of the developing world has to catch up. So the demand for base metals is going to be strong, notwithstanding lithium's glut. The demand for that will be strong too. And also in rare earths, as the Americans move away from Chinese supply to other countries to meet their insatiable need for that particular commodity. So there's always companies in that space that you'll find. There's always interesting things in the share market, interesting themes to invest in. You just got to be diligent enough and across it, and yes, invest a bit of time to make sure you don't miss them, because if you do, it can take you ages to catch up.
Well, if I could ask you to take your investor hat off, Elio, and put more of your economist business hat on, do you have a view about, depending on which way the election goes in the US, which party would be better for Australian businesses?
Oh, well, that's an interesting question because, of course, our major trading partner is China and our economic engine is the Asia region rather than the US as such. So in of itself, I don't think policies that are driven from the US will impact us so much, possibly to the downside in the sense that protectionist policies that President Trump was touting would very much hurt our primary industries like agriculture and the like. But I think if it's whoever would suit the Chinese outcome, that would suit better. Both President Trump as well as Biden have said that they want to take a tougher stance on China. That would mean in of itself that could possibly be a problem for us, particularly as we align ourselves politically with the US. But yeah, to be honest with you, I don't think this is a main game for Australian businesses. Our focus is very much on the Asia region, and things that occur in that area are going to be more important to us than who wins the US election.
Okay, well, back to investors. What's your best advice to them as they listen to you now at the pointy end of the US election?
Block out the noise is all I can say. Make sure that your portfolios at the moment are as de-risked as they possibly can be. So if you've got too much exposure in one stock, for example, it's a great chance to take some profits. If you're taking a bit of a punt on a stock, there's upside and downside risk. It would be fair to suggest that at the moment, there's a little bit of increased downside risk. So, when you sell out of a stock, it's just like taking insurance to make sure you can battle another day, because there'll be future bull runs, there'll be future opportunities to invest in, but it is about managing risks. And that's what really money management is, particularly if you're doing it yourself. So just be calm. Don't invest based on headlines, because, one day when the markets fall, the next day they rally. It can be a double-edged sword and hurt you both on the way down and on the way up. So just de-risk the portfolio, make sure it's sane and simple, and just let it roll, because over the long run, great businesses will survive, and when they thrive, so will your portfolio.
Okay, well, I've got one more question for you, Elio. Just when people are looking for some sound advice, you've just launched a select consultancy service for investors. So what's that all about?
Yeah, thank you very much. Spotty Consulting. So Spotty's the name of the streaming show that I do, and we've launched a consulting arm, which is an exclusive coaching and mentoring services for those that still want to manage a direct share portfolio but may not have the time, focus, or, let's face it, the innate desire to do so. We guide, we educate, and we inform. We help build an investing plan that works to your preferences, not ours. That's most important, because most of us analysts tend to think we, bestow our methods to the world and everyone should just accept them, whereas we're all different beasts. So we build you a plan based on that. My partner in Shine is Chris Batchelor, and we offer 40 plus years of experience in investing. Plus, via the streaming show I do, I have access to some of the greatest and leading investment thinkers in this country. Basically, we invest with you and in you to help you achieve your goals. We offer our services at an hourly rate, as well as a highly discounted annual rate as well. Plus, the service is tax deductible, which always helps. And it is an investment, but it's an investment in yourself. And you can go to the website, spotty.com.au. You'll see consulting services up the top of the toolbar there. Just click on that, and I would encourage everyone to have a read of that to see whether a premium service such as this would be of value to them.
That was Managing Director of spotty.com.au, Elio D'Amato. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow @BE Daily Podcast across social media, and head to bedaily.com.au for more from the Business Essentials Daily podcast. SoundCartel.